Hello and welcome to NSE Presents Nivesh India powered by ET Now. Today we're in the heart of the country in Nagpur with a buzzing audience, and to walk us through why you should be investing into equities, today we have with us Sandeep Sabharwal joining in.
When you come into the market and buy stock, you need to be very clear on what you are doing. So if you are actually investing, then you need to invest for the long run. So long run investing is not that you buy a stock today and it goes up by 10% tomorrow and you are really happy. So that's actually luck. So that's not investing. That you buy today and it goes up tomorrow and gives you return, you are lucky. But if that company is actually doing well and gives you returns over a period of time, that's what long-term investing is all about. And that's what I think small investors or retail investors should be doing. Because largely trading in, trading out without much of knowledge ultimately leads to losses. The other thing is that equity markets are prone to manipulation. So we can't deny that there are manipulations which happen in small cap, mid cap stocks all the time, especially when markets are doing very well. So it's important for you to avoid those stocks. And again, not to get disillusioned by equities. So if you buy some speculative stock which has already gone up from 10 to 100, and that's the time you start getting stories that this is a great stock to buy, and you end up buying that stock and then it halves from there, then it's not actually the fault of the equity market. Then it's actually your greed, that because you became so greedy that you wanted to buy that stock which has already gone up 10 times, then actually that was not such a great idea to buy into that stock. So I think from a retail investor perspective, these things are important. The other big factor is that the country today is actually looking at a paradigm of growth and the kind of growth prospects which were never there in the past. So I think people have got disillusioned with the policies of the new government too early. But I think the things are getting set in place for a very strong up move in the economy. And that will ultimately lead to stock markets doing very well over the next 5 to 10 years. And that's what all of you should be thinking about and buying into, and just ignore the short-term fluctuation and noises which keep on coming up all the time. Thank you.
Over a period of time, equity has given better returns than any other asset class, and as we see inflation coming down or the interest rate coming down, I think the more people will start making an attempt to learn stock market, because today we may be very happy in terms of getting 8-9% in FD and all without much of effort, but when the interest rate cycle comes down and the interest rate maybe say around 4% and you still want to earn around 8-10%, then I think stock market is something where people have to start learning it. This is also translated because now the EPFO, the government also is investing, the provident fund money also incremental has started investing into the stock market. This initiative has already started now from this year itself. Though a lot of provident fund money also is moving into the stock market. People who are first time investors, ETF is one of the very good step for them to enter into the stock market. What is ETF? ETF is basically a mutual fund which can be traded like a stock market. So if you are investing into mutual fund, a mutual fund would generally cost you around 2.5% or so, as that is the entry fees or the load fees which you have to pay through a mutual fund. If you are trading or you're buying a Nifty ETF, which is basically betting or taking as an investor, you are betting on India as a growth story, then you suppose the index is at 8/10, so effectively 800 rupees is what you need to invest monthly. You can open an SIP as a route to make an investment into the Nifty ETF. So ETF is one of the effective way for you to start investing into stock market. It is more effective in terms of cost also vis-a-vis the mutual fund. That is it.